IDFC first in focus, the stock under pressure on account of numbers. We spoke with Sudhanshu Jain, the Chief Financial Officer of the bank. Here's what he had to say. Listen in.
I want to start with the all-important profit number, of course. That has been a bit of a disappointment for people who are watching it. How would you characterize the net profit for the quarter and what contributed to this drop of about 58%?
Yeah, first of all, good morning, Vishwanath, and good morning to all the viewers. Profit has been, I would agree, that has been slightly muted. But this is the guidance which we had given even in the earlier quarter. And during the quarter, we faced, I would say, a couple of impacts, both largely related to MFI business, which we have been scaling down considerably. Even in this quarter, the book has come off by about 13%. As a result of that, the NI had an impact because of the declining MFI book. We had also guided in the previous conversations that we would also see elevated provisions in MFI coming through. That has how it has played out. And hence, these are essentially the two impacts which have come and sort of have impacted the profits. As we go forward, we see that the impact of this will keep coming down. And in fact, MFI provisions, we expect it to come down quarter on quarter from here on.
Okay, so we're more or less on the peak, is what you would say on the provisions front.
That's correct. That's correct on MFI.
Okay, I want to talk a little bit about certain guidance that you have provided. While talking to analysts, you did say that this is the peak and it's likely to come down. But over the weekend, we have also seen news coming in from, say, the Tamil Nadu state government, where laws have been tabled at this point in time, the Tamil Nadu Assembly, which say that coercive recovery practices will sort of attract criminal action by the state government. Any concerns at all with Tamil Nadu, Karnataka, all these states coming out with these tough norms on recoveries in the microfinance space?
Yeah, so this is still not a legislation. I know this proposal has been put up in the assembly. A similar legislation, as you rightly said, came in Karnataka. Of course, in Karnataka also, if you see the legislation, that was not applicable to regulated entities, banks, and NBFCs. But having said that, it did cause some teething issues in the interim. We in fact saw collection efficiency dropping quite significantly in January and February in Karnataka. But the good part is even in March in Karnataka, we have seen the collection efficiency coming down again strongly. So a similar phenomena could sort of work out in Tamil Nadu as and when this legislation comes out. But we should also note that over last 1 year, a lot of stress has already flown in. We have also done a lot of policy interventions. As you would have seen, we have slowed down on growth. So a lot of, we have already implemented proactively the MFIN guidelines. So we cautiously would continue to monitor this portfolio and would see how this pans out.
Okay, coming to the growth guidance front, for FY26, you're guiding to the analysts about a 20% loan growth and 22% deposit growth. Now the loan growth part is pretty much the same as it was in FY25, but deposit growth is slightly lower. And you've also talked about bringing down high-cost deposits on your portfolio. What is the trajectory looking like?
So when we think of the growth numbers, we essentially first assess what is our requirement, right? If you see that we are growing at about 20%, and for that to sustain that kind of a growth, we need a deposit growth of only about 23 to 24%. We don't want to carry excess liquidity. We have also announced that an equity infusion could come in due course. The resultant of this is also in a way measurable to the CD ratio, which is the credit deposit ratio. If you see the numbers for last 2 years, that has come down from 107% to 94%. Even in the previous year, it was 98%. So as long as we feel that deposits will continue to grow faster than advances, we feel that we are quite sorted and comfortable. So we actually pace it according to our requirements, and that's how it is.
Okay. Just coming on the return on assets front as well, the ROA at 0.36 as of Q4. Just wanted to understand from you, is there, because of the equity infusion and the resultant growth, do you think that number would then go up in FY26? What is the outlook looking like for that?
Definitely, it should keep improving. We expect the profits to inch up quarter on quarter. As I said, some of the drags pertaining to MFI is also expected to come down. Of course, we may face certain impacts coming out because of repo transmissions happening in the near term. But still, we are confident that the ROA trajectory should keep improving. In fact, we are guiding that we should again touch the 1% ROA mark by Q4 of FY26. So the trajectory should be improving quarter on quarter.
Understood. Coming to the capital adequacy front, now, of course, you've consumed some amount of capital during Q4. I'm assuming that is because of the provisioning that you've done against the microfinance portfolio. Going ahead, there is equity coming in, of course, that is the expectation. Where do you see the sort of ideal capital adequacy ratio for IDFC First?
Capital adequacy, if you see the March numbers, that's at about 15.5%. In fact, with the capital infusion which we have announced, this number, if calculated in March, would jump to 18.2%. We feel that for a 20% growth, the capital adequacy is quite strong. In fact, it gives us a lot of headroom for at least maybe about a couple of years. So we will ensure that we are adequately capitalized at all points of time. So we feel that this capital is good enough to sort of push our growth agenda.
Okay. Last question I wanted to ask you was with regard to the overall loan growth front. Any specific sectors that you're targeting for the year? Or do you think that a broad-based growth is probably the way to go ahead?
MFI, like example, MFI we feel will still continue to come down a bit. But we have a wide bouquet of products, right? So we could expect growth still to come in vehicles, in education loans, in credit cards, gold loans, business banking loans. So it's a wide corporate loans. Again, if you would see that we have started growing that portfolio as well, mortgage to some extent. So it would be broad-based. Even without decline in MFI, we feel the rest of the book could grow at about 21 to 22%, thereby giving us that 20% growth. Vishwanath, if you see, and also to the viewers, we are still not that very big. Our loan book is about 240,000 crores, right? So we feel that chasing a 20% growth should not be a challenge.
Right, so that's with regards to the management of IDFC First. Profits have been slightly muted. Let's pull up our